Welcome to the Crop Insurance Podcast, the podcast where we dive deep into the world of crop insurance. I'm your host, Mike Rydell, a third-generation crop insurance agent, and I'm thrilled to have you join me on this educational journey. At our family-owned and operated business, we've been providing crop insurance expertise for generations. Our goal here is simple, to educate our listeners. Crop insurance can be complex and overwhelming, but I believe that understanding it is crucial for every farmer. So whether you're a seasoned farmer looking to stay updated or a newcomer seeking guidance, this podcast is for you. In our previous podcast, we spoke about the APH, or your actual production history, and how to find the naked APH, just taking the simple average of the yields that you have in your database. So if you haven't listened to that episode already, I encourage you to go back and listen to it as well, or maybe listen to it again so you have a good understanding of how the APH works. If you're able to, click on the link in the podcast for this episode, and it'll take you to our website where we have some tables you can look at that kind of helps to understand how this works a little bit better. But we'll do a good job of explaining it here so you can listen as well. So today what we're going to talk about is the first sort of basic option you can add to your crop insurance policy, what's known as YA and YC. YA stands for yield adjustment and YC stands for yield cup. Now you can have one or the other, and the reason we're describing both of these in the same episode is because the yield adjustment option used to include yield cup. It was one thing, but Federal Crop, of course, made some changes. And so now instead of having one acronym, just YA, you would have YA and YC on your policy. And so what I'll start by saying is I cannot think of any reason why you would not take this option. It's very straightforward. It helps you increase your APH if you have some years of bad history. It's kind of one of those no-brainer options that you should carry. And so I'll go into how it works, but I just wanted to start off with that right off the bat, is that you really should include YA and YC on your policy. So the way it works is with YA, yield adjustment, when you look at your database for your APH, and let's say you've got all 10 line items in there spanning back however many years, what it does is it looks at each individual year and it looks at your yield. And again, your yield is going to be production divided by acres. And anytime that yield is less than 60% of your county T yield, instead of factoring in that lower number in your calculation for your APH, which would be your naked APH, where they would include that number, instead of including that number, what they do is they plug in 60% of the county T yield. So let's say, for example, that we're looking at, summer, fall, winter wheat in a county, and the county T yield is 40 bushels to the acre. So 60% of 40 is 24 bushels to the acre. So let's say you had a year where you were hailed out, or maybe winter option, winter kill, or just drought or something occurred where you had less than 24 bushels an acre. Let's say you had 0. You got completely hailed out. Well, when factoring your APH without YA, it would factor in that 0 as part of your average. And so that's going to lower your APH. Whereas if you have YA, what it's going to do is instead of plugging a 0 in there, it's going to plug 60% of the county T yield, or a 24 in there, for example, for the summer, fall, winter wheat, let's say. And that will increase your APH because it's limiting your losses. And so, again, your rate is going to be based off of your naked APH, which is why they call it your rate yield. But your coverage is going to be based on whatever options you have on your policy. So if you have YA, in this scenario, you would have a higher APH because it plugged in that county T yield. And so very, very, very helpful. Now, YC, yield cup, what that says is from any one year to the next, your APH cannot drop by more than 10%. So if you had not a lot of history, let's say you only had 4 years of history, which is the minimum, or you have county T yields in there, whatever, what have you, and you have a 0, you get completely hailed out. And when they factor your APH, and let's say you don't have YA, and they factor your APH and it drops by more than 10% of the previous year's APH, it would limit it and plug in so then you could look at it the other way, it would plug in 90% of the previous year's APH. So it'll limit how far you can go down. Now, I've run the math a bunch of different ways, and with YA and YC, it's very difficult to have your APH drop by more than 10% year over year, because instead of plugging in a 0 or some super low number, with YA, it's going to plug in 60% of the county T yield. So I'm sure you could find some scenarios where the math pans out where it would drop it. If you had very high yields, when you only have 1 year of history and you're plugging in those county T yields and you had a bad year, yeah, I could see even with YA, it could drop by more than 10%. So the YC would help. Because they used to be one option combined, I always tell my farmers that you want both YA and YC on your policy. And again, if you go to the link in this podcast episode, follow that link to our website, you can see where I have these little tables and it does the math and it explains it a little bit better if you're a visual learner. But at the end of the day, it's one of those kind of no-brainer options that you should have on your policy. And it is available for most crops in most counties. So I'll definitely take a look at it. From my family to yours, thank you very much for listening. I sincerely hope that this presentation has been instrumental in enhancing your understanding of federal crop insurance. If you find value in our podcast, we kindly encourage you to subscribe and spread the word among your friends and neighbors. To access further information, please visit our website at thecropinsurancepodcast.com, where you'll find the latest podcast episodes, articles, and exciting new features conveniently located in one place. This information is not all-inclusive and is meant to be used only as general guidelines for educational purposes. For additional information, please see crop provisions, reference the Crop Insurance Handbook or Loss Adjustment Manual, or contact your crop insurance agent. This institution is an equal opportunity provider and employer.